The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master. Now, I am here to inspire you, but more importantly, folks, I'm here to help lay the groundwork, the ground rules for how it is that each of us lead a more inspired life, because that is really what it's all about. And it is Wonderful Wednesday, so hopefully you're off to a great start of your workday. If not, you can change it, folks, in a heartbeat. And how do you do that? Well, you don't become a prisoner of your past, even if it's your past of yesterday. You want to be a pioneer of your future. Today is a new day. Of course, in the markets, today is going to be basically a flat day for the next several hours until you get the release of the Fed notes, until you get Bernanke up on the stump there, and people are, waiting on every single word that he's got out there. Of course, if we do take a look at the markets, and folks, you can always follow us at TigerTV. We absolutely appreciate everybody listening to us on the radio. That's great. And you can catch an archive of this show to see the actual charts that we'll put up on the screen here. The archive of this show is on Channel 9. Why? Because, learning is not just audio. It's also about visual. You put those two together and you pick up maybe an extra 20% with regard to your ability to truly gain knowledge, and it's really all about patterns. What you talk about, I talk about A to B equals CD patterns. That doesn't always mean it's a 100% A to B equals CD. I also use the Fibonacci summation sequence. I've got it live here on my screen right now. We're looking at a 30-minute ES mini chart. And when you take a look at this 30-minute ES mini chart, I've got a tool set up here so that it automatically is calculating expansions and contractions between swing points, because that is exactly what goes on in the world, in your world, my world, all of our worlds, on a continuous, ongoing basis. You're either expanding or you're contracting, or you're simply having dirt thrown in your face. And, we're not about having dirt thrown in our face. And so if you take a look at the numbers, what I do is say there's really a set of numbers, 5 primary numbers that you want to be paying attention to: 0.382, 0.618, 0.786. Those are your contraction numbers. Your expansion numbers: 1.272, 1.618. There's others, but if you just simply understood those 5, you'll see those occur on a continuous basis. Now, if you just take a look at the highs, actually, again, this is a 30-minute chart that we're looking at, and the highs that I'm talking about coming in yesterday at 2 p.m. Now, what you also had coming in at 2 p.m., I'm not going to go draw the A to B equals C, what's actually out there, but I'm not going to go ahead and draw it. In fact, I'm going to get rid of it just to clean up the chart. Sometimes it's easier to follow along when you are playing the home game if we get rid of some of the clutter that's on the screen. So what you did do yesterday, or what you didn't do, but certainly the ES Mini did yesterday, was it completed an A to B equals CD up pattern, and then it gave us a signal that it was ready to pull back. What was that signal? Well, that was one of my candles. I'd like it to be one of your candles as well. That was this bearish engulfing candle. It occurred right here between the 2 and 2:30 time frame. You got a confirmation on the following candle. Of course, during that candle, what you did see, though, is you saw that the bulls weren't ready to just sit this thing out. What do I mean by that? This candle here, folks, no candle name at all, but just simply when you take a look at what's going on during the session, you can understand who's winning the battles. And that's really what all this is about. It's just simply about battles that you're taking a look at on the screen between bulls and bears. Each of us deal with battles on a daily basis, whether it has to do with trading or anything else that we have going on inside our life here. Well, in this case here, even though you had a bearish engulfing candle, what you did have was you had where during the intraday period, during that period, now this is a 30-minute chart, so this means that between the 2:30 and 3 o'clock time frame, what you had was you had the bears push the market all the way down. When I say all the way down, I'm talking to a price point of 1350.25. Actually finished out that session of 1353.25. 3 points may not seem like a lot to you, but it's more about understanding, have the bulls just simply given up? And in that stage there, after having a bearish engulfing pattern, they just simply did not give up. And what you've had really is a shallow retracement at this point. What do I mean by shallow retracement? Well, if you take a look at the just between swing points, and swing points are nothing more, folks, than just simply major intersections that you come to when you're taking a look at a stock chart. Just like you you have swing points in your life. They're major intersections. Whether you're driving home, you're coming to a swing point and you're going to turn around, especially if you forgot the keys or you don't have a way to get into your home, you're going to go back and get those things, right? I did that recently. And so what you would do, folks, is, those are swing points. I digress. You take a look at swing points. Well, if you take a look at the most recent, the swing point prior to that out there happened to be at the 4:30 a.m. time frame on June 19th. Now, the retracement, as the market was moving down on this 30-minute chart, what kind of retracement did it do? A shallow retracement. 0.382 was the retracement off of that most recent swing point. Now, here's just truly a thing of beauty. When I talk about 382, 618, 786, and when you get to those areas, what you're typically going to see is you're going to see price or people moving off of a elevator. I try to use visuals because the easiest way to be able to teach somebody something, or the easiest way to be able to learn, is just always link the known to the unknown. You may not understand these retracement levels. You may not understand how is it that you really calculate the math. I certainly want to be able to teach you to do that. But if you just visually knew that, if you just understood that as price was moving up or down into those areas, especially where you have an area where you're going to see two mathematical expansion or contraction numbers conjunct, if you will, where they come together. And really that's what you had out here coming into the 5:30 a.m. time frame. Because this morning I'm talking about, because when you take a look at the session high that we were talking about out here that came in at 2 o'clock, and then we had that bearish engulfing candle. When you take a look at from that to the low that was actually put in at 4 a.m. this morning, as the market was then moving up, it was moving up and it was doing an expansion. It was actually the first time it had done an expansion since you had the market pull down off of that low from yesterday at 2 p.m. Now, the expansion that it did between a couple of swing points, you'll see here it says 1.35. Now, in life, this is how I want you to be able to use this on a stock chart. This is how I want you to be able to use it in life. We're not looking for exactness. We're just looking to be outstanding. You're not looking for perfection. If you search for perfection, boy, I wanted to get that out quickly, didn't I? If you search for perfection, folks, you might as well pack it in, because it doesn't exist out there. But you do look for something to be outstanding. 1.272, close enough to me to that 1.315, also coming into a 0.618 retracement area. What's the market do? Pulls back, makes a 0.382 retracement of the last move up. What's the market doing right now as we speak? Making a 0.618 retracement just of swing points. This works on all time frames. I just simply show this to you on shorter time frames here. Again, we're looking at a 30-minute chart, and so much for math, at least just for the moment. You can always give us a call, 877-927-6648. We take any and all questions here. And if we take a look at, just take a look at around the world, see what the markets are doing. Right now, you've got we'll take a look at the ES Mini here. It's up about a point. So a relatively flat day. You're seeing some small little, it's almost a barely readable EKG out there. If you take a look at the Dow futures, up maybe about a dozen points. If you take a look at the NASDAQ futures, up 5. Russell 2000 basically almost flat, up 70 cents right now. The dollar index down 11 ticks, trading out at 81.57. Gold, though, pulling back $17. That's interesting. If gold was expecting a additional round of quantitative easing, you would think that gold would be trading up $16, not down $16. Silver down 23 cents out at 28.14. You would think if there was going to be some quantitative easing on the gold side of or the silver side of the market, silver would be trading up at least 23 cents. It's not. You've got light sweet crude trading down 41 cents. You've got natural gas up 8 ticks right now. Around the world, you've got the DAX and the FTSE up. The DAX is up 9 points, so no big shakes there. The FTSE's up 21 points, 0.3%. No big deal there. You had the Nikkei was up nicely last night, up a full percent. That was the handoff that we gave to Asia. Last night, of course, our first handoff was over into Australia. But if you take a look at Asia, Japan specifically, you had the Nikkei up 96 points. Hang Seng up 102 points, 0.5%, and the Shanghai basically flat, down 6 points, not even about 0.25% down. Again, our call-in number is 877-927-6648. Now, I did a cool thing again last night. I did this a couple of weeks ago. I had the opportunity to share some wisdom, some thoughts with some struggling young adults. In fact, not just the struggling young adults, but the struggling young adults and their family. And the focus of last night, what they wanted to discuss was detachment. And detachment is actually a really cool subject matter, in my opinion, to talk about. Why? Because each of us need to be able to detach ourselves from our ideas, from our thoughts when it comes to trading these markets. You have to be able to open yourself up. See, detachment is about being able to get rid of your story. When you show up to a market and you take a look at a chart pattern here, what you want the chart pattern to tell you the story. If you show up wanting the chart to reflect your story, maybe this is getting confusing to you, folks, it's going to make it more and more difficult to trade. It's that way in life as well. And there's all kinds of folks out there. You know, we do an opening here on Tuesdays, I believe, is with Sylvester Stallone. He didn't buy into the story that others were telling him. He bought into his own story, folks. There's other examples like that. Michael Jordan, Roger Bannister, who broke the 4-minute mile, Rudy Rudiger, Tom O'Brien, Basil Chapman. In fact, Basil Chapman will be up today. So will Larry Pesavento. Each of us have our stories, folks. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. It is Wonderful Wednesday. That means you're in store for our Wonderful Wednesday lineup of hosts here. Following this show, you got Tom and I doing the Money Masters show. Then we go to Newton, Mass. to our man Basil Chapman. He's got a story about the Chapman Peak, some mountains out there. Not bad to have a whole mountain range named after you. You've got the from 12 to 1, we go up to Tucson to Larry Pesavento. Back here from 3 to 4 for the David White Show. David's not going to be able to join us today, so I'm going to fill in for him. Do triple duty. I'll fill in from David from 3 to 4. I'll be the warm-up band for the Tom O'Brien Show today from 4 to 6. Now let's go take a look at some of the stories that the charts are telling us here in the market. Just try to understand where things are at and where things could go to on either side. Let's take a look at bullish cases. Let's take a look at bearish cases out here. So what I've got up on the screen here right now happens to be the NASDAQ futures. NASDAQ futures right now trading out at 26.18. What the NASDAQ futures did yesterday, so it's an inside day as we speak right now. NASDAQ futures yesterday got up to a high of 26.26, closed out the session at 26.1250. 26.26, folks, was running right into the lows from April 23rd. The actual low, 26.25. So it's running into a resistance point. That was one area of resistance. Another area of resistance, the following trading session on April 24th. The next area of resistance is this down thrust that occurred on May the 4th inside the NASDAQ. That level there, 26.25. 25. So it's running into quite an area of supply right now, trying to break through that area. If you just simply take a look at retracements, and we'll take a look at the retracement here, what you would go from the top all the way down to the bottom. What you'll see, it is above the 0.382 of the larger move, going back to March 28th when you had the high, or really April 3rd, I should say. April 3rd, March 28th, pretty much the same high out there. And so you can see you're above the 0.382 level. Now, you get above the 0.382 level, it's like being in the middle of a elevator ride. You're going to go up to the next floor. Typically, of course, what it's running into is that resistance zone, that next floor being 26.54. You're at 26.18 right now. If you take a look at the swing point from right here, which would be May Day, May 1st. So let's take a look and see what the retracement has been off of the May Day area. What you will really see is off of that swing, what the NASDAQ futures did was they did the 0.618 retracement. The exact number, 26.31. Again, where the NASDAQ futures got to yesterday was 26.26. 5-point difference in my work. That's outstanding. And that is close enough for me. So, you've run into just simply some down thrust areas. You've also run into that 0.618 retracement level. You haven't made an A to B equals CD pattern, at least on the daily chart. If you're going to look at an A to B equals CD pattern. So the bearish case right now, while you're just simply going to have the market just sit here and wait, with bated breath for the Fed release information. What you would be taking a look at, the bearish case, is this is held as a resistance area. And that would then set up the next A to B equals CD down leg. Because what you'd be looking at here is your A point, and I would use the smaller one. The A point out here would happen to be May 1st. Okay, so you've done a 0.618 retracement off of that. That A to B equals CD leg, folks, just the one-to-one that you would be looking at. I'll tell you where that will take you. That would take price in the market down to the 23.06 level, 22.18. What do you do when you get back there? You get back into the December 19th area. It's where the market wants to head to. We know that it wants to head down into that area. Now, if that is not what the case. Maybe there's more sugar in the Kool-Aid stand that's going to be sold out in the marketplace. And if there's going to be more sugar then what you're looking at is an A to B equals C to E up. So where's that going to take you? Well, if you take a look at the A point on this, the A point happens to be the lows put in on that full moon Monday. That was a week ago. Not 2 days ago, but 10 days ago. And that low out there is 24.33. Your B point happened to be the coming into the last Monday, June 11th. So maybe it was 2 Mondays ago. So last Monday, June 11th, when they decided they were going to stock up the banks in Spain. They still haven't stocked them, I believe, but they said they were going to at least stock them with some cash out there. But the B point is 25.98. Your C point, the pullback, happened to be the next trading session when you made a low on the NASDAQ futures out at 25.05. Now, what you want to take a look at is you want to take a look at that retracement. What was that A to B? Really, what was that B to C retracement? Well, you'll see close enough to a 0.618. So what you would expect is a 1-to-1 A to B equals C to D to complete. That would be in that 2669 range. Just got to wipe off my glasses here. 877-927-6648. Futures flat as can be. We get back, we'll go see how these markets are going to open. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter. You get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow down 6 points. S&P's off 1. Composite down almost 2 points. Small caps down 1.5. Microsoft up 11 cents. They had a nice big day yesterday. Intel down 9 cents. Google off about $3. Cisco trading up 20 cents right now. Apple down a quarter. Woohoo! Let's see, what is popping and what? That's my best woohoo I could do out there for you folks. That is, let's go find out what's popping and what is dropping out there. So, leading the charge to the upside, you've got Gevo Inc. G-E-V-O is the ticker symbol. That's why they call them Gevo. That is up 35%. They must have a buyout or something going on. So, Gevo says, District Court denied motion for a preliminary injunction. So, this is a legal matter here. Malaysian collaboration. So it's a legal matter here, and the market is certainly digging that. Up 36% right now. It's up $2 on an $8, was a $6 stock last night. You got GNC Holdings. GNC, one of the IBD stocks out there. GNC trading up 4% right now. That's up $1.53. Right behind them, Tesla Motors, TSLA, up $1.60. That's up 4%. You got Idenix Pharmaceuticals, IDIX. I believe we reported on these folks are up 13%. That is based on some positive clinical data for their HCV drug candidates. You've got the Cliffs Natural, CLF. I imagine those are the guys that make some of those bars that I have every now and then that you see in the health food stores. Maybe see them in the unhealthy food stores as well. They're up 87 cents. That's up $1.7%. You got Marathon Petroleum, MPC, up $1 right now. That's up 2.5%. Molycorp, MCP, up 3% this morning, up 69 cents. JP Morgan, they say they've gotten rid of a significant portion. I don't recall what the percentage was, somewhere in the 70%-ish range of the whale trade, whatever trade that was out there. JP Morgan trading up about 1 7/10%. Nike, NKE, they're up 0.5% this morning. Nothing really large dollar-wise. You got 1, 2, 3, 4 or 5 stocks up over $1. To the downside, though, when you take a look at stocks down more than $1, Google leading the charge down 340. LinkedIn, LNKD down 2% this morning. Adobe Systems, ADBE. You love Adobe products, at least Photoshop. And down 6% this morning. Apparently the market doesn't like whatever. I don't see what do they have out here in Adobe as far as announcements here. They lifted their fiscal 12 earnings per share outlook, and whatever they lifted it to, the market doesn't dig that. You got Navistar, NAV, down another 6% this morning. We'll take a look at that. Netflix trading off $1.60. Anheuser-Busch, this bud is for you. BUD being the ticker symbol there, down 2% this morning. Kimberly-Clark off about 2% as well, down $1 and change. Colgate, Palmolive, CL down. United Rentals, Union Pacific, Walgreens, WAG, WAG trading off as well. And I thought Procter & Gamble might be up here, but they're not. They announced they lowered their forecast, I believe. And if you take a look at PG is the ticker symbol here. Let's see, where is, I'm on the wrong thing, no wonder. Got to look to the Dow to find Procter & Gamble. Where is it? And here, PG, they are trading off. Well, they're trading off $2 right now, so they're down, trading out at 60. So let's go take a look at some of these stocks that are popping, some of them that are dropping. So let's go take a look at Choice Hotels, up 10%. Choice Hotels, I believe, was that doing a buyout? No, I don't see that there. So let's go take a look at Choice Hotels. Let's clear my palette here. Let's go do some artwork. Let's close all these things down. And so let's start off with Choice Hotels, ticker symbol CHH out there, folks. So that's traded up a nice 9% so far. You can see this thing gapped up with volume. So let's go see what Choice Hotels is doing. We'll go ahead and so it's going after its highs. Let's go take a look at this. Put this first on a weekly chart. Get a little bit more data out here. Okay, so not truly taking on its highs. Look at the downdraft in this guy. Holy cow. So you talk about running into supply lines. Well, Choice Hotels certainly doing that. The week of July 28, 2006, this thing went from a high of 58.88 all the way down to a low of 42.96. That's $16 on a $58 stock. That is, by my recollection, or my calculations, I should say, over 30%. Now, it's not so much that it dropped by over 30% in a week. It did it with 9.2 million shares, folks. That was on the way down. On the way up, it's done it, it's attacked it with 522,000 shares. Most recently, the session before that, 2.4 million shares. 522, that can't be right. It says that it's right. I'm going to just refresh the screen just to make sure here, because I don't like giving out bad data, or inaccurate data, I should say. Okay, so Choice Hotels certainly running into a supply line that seems to still be out there, folks. And so right now trading out at 41.97. You can see this thing has been, ever since that time period, has truly been in a sideways to downward consolidation range. But they are trading up nicely today, no doubt about that. If we take a look at go back to the daily chart, again, this is on Choice Hotels here, they are taking out a B point with volume, wide price spread, and accelerated volume. That B point here would take an ABC probably up towards the top of its consolidation range. That A point would be the lows of August 8th, 2011. Low out there, $26.31. B point out here at the highs on December 27th when it makes a high of $39.45. Pulls back into the lows in the May 18th time frame, pulls back to 34.8. A 1-to-1 A to B equals CD takes you up to 47.89. And that makes a lot of sense because that's the last time that this thing fell off the face of the earth on the daily chart. That is back in that July 26th area. So you can see the large gap down there, and that actual candle, July 27, 2006, high of 48.32, low of 42.30. So you're looking 48.32 is going to, on the A to B equals CD screen here, is going to be a basically a 1-to-1, maybe a 1 to 1.272. So it makes sense. That's what it's going to do. That is on Choice Hotels. Actually, depending on the direction of the market, may want to write that down as a potential short candidate out here, except for today's action. But you do have some volume down here at the lows going back to August 16th in 2011 as well. Let's go take a look at GEVO. GEVO, let's see. Yeah, they're up 44%. So let's just simply go take a look at that stock, GEVO. See what in the heck GEVO is doing. Up $8.50. They're trading out at $8.57 right now. And this is a stock. Okay, so you got an IPO. Comes out February 2011. Opens up at the 1552. You're trading at 860 right now. Those people are doing the woo-hoos of life. Maybe they're going to get back a little bit of their capital. This thing, folks, got up to a high, and this is kind of interesting, gets up to a high of $26 on 140,000 shares. So you're talking about a relatively illiquid stock out here. So it gets up to a high of, as I say, $26. Gets down to a low, and it does it recently. Does it on May 23rd, 2012. Gets down to a low of $4.84. $4.84 versus $26. Now, ABC down patterns, if we take a look at just simply the patterns that were out there on this stock to help you identify where the stock was headed to, you've got a 1-to-1 A to B equals CD pattern. 518 is the completion point. And when it made the low coming into May 23rd, actually got down to 484, closed out at 535. So it's why you certainly want to understand your A to B equals CDs out there. This thing is trading up on some nice volume today. Maybe this is going to, what is this thing going to do? I don't know. I wouldn't get in front of GIVO with a 10-foot pole, any kind of pole, not even a 50-foot pole, not even a 1-foot pole. Let's go take a look at what is popping to the dropping to the downside. You got the Liquidity Services. I believe they had a tough day. That is an IBD stock as well. LQDT out there. They are down to 7% this morning, trading down at 53.25. Down. Maybe it wasn't Liquidity that was having the trouble here. This one, so this was, we took a look at this stock, and so this one was one that had a breakout session because this was the number one as we start going through our IBD 50 stocks, just searching for treasures out there. So this was the, maybe still is the number one stock inside the IBD 50. Probably not going to hold that number one status. Today it is breaking down with conviction. You've been trading for 14 minutes, 246,000 shares to the downside. And this one here was one where it broke out on May 3rd, does it with 1.7 million shares, breaks out from the prior trading session May 2nd. May 2nd, the high of that candle is 56.05. You gap up the next trading day. On May the 2nd, you do 644,000 shares. You gap up with 1.7 million shares. Not bad. That's more than 100% in shares. But what was the sign of concern out here in this stock was and it was the first time, I believe, that you had a significant downdraft. In fact, it was the only sign that you had a significant downdraft, and you were starting to see markdown. You were starting to actually see institutional selling happen to be May 17th, and that's why you want to understand volume bars both on the way up and on the way down. So it was telling you at that stage, all of a sudden you had some institutional selling, and you would have expected something like that with a stock that had a run like this. I mean, this run, goes back into the 2010 time frame. You're trading out at $11 up to $68. In a short period of time, you're making a 600% return. Not exactly too shabby there. So you got to expect you're going to start seeing some institutional selling at some point in time. Well, you're now seeing it today, for sure, because the candle that it's coming into happens to be that May 2nd area where it gapped up. That had 644,000 shares. So far today you've done almost 300,000 shares on the way down. So this thing is going to, if you take a look at the A to B equals CD, that is in play out here. It's going to be taking out the swing point from June 15th that has 1 million shares. So that should be no problem. That is in Liquidity Services. Is it Services? Liquidity Services. So your 8 point is going to be, I would use June 7, 2012, the high of 65.86. We just discussed the B point. That's the June 15th low. Trades up into June 19th. Yesterday gets up to a high of 60.21. This is going to run to at least 46.84, more likely 43.17. So let's go see what that is going to run into. It's likely going to be a volume candle. Okay, 39.24 is more likely where this thing wants to head to. The last time that it had a breakout area is going to go all the way back into February 2012. That is on Liquidity Services. If we go take so let's go take a look at what do we want to take a look at next? Let's go take a look at Adobe Systems. I want to see what they are doing out there. The ticker symbol ADBE, because they are trading down this morning. I love their product, down 6%, trading down $2. So this gaps down this morning, gaps down with volume. Again, you've got a daily chart up on the screen here. And so we take a look at Adobe Systems. It's now coming into the swing point from June 1st. 4.3 million shares at that swing point low. So far today, you've done 3.6. Okay, so this is going to not just attack it. Looks like it wants to try to take it out. Now, do you have a sign of institutional selling inside Adobe? Well, absolutely, Steve. Of course you do. Why? You can see it here on March 20th. March 20th, air comes out of this balloon, does it with 16.3 million shares. That was the candle on the way down. You see some other institutional selling that occurred back in November of 2011, 27 million shares on November the 9th. Today, so far in, 17 minutes of trading, 3.6 million shares. So this is certainly going to be attacking the swing point from June the 1st. Now, it's not trading underneath it right now, but that's the A to B equals CD pattern that it is trying to set up. Looks like it completed the smaller one first, the smaller one being the highs of April 2nd out at 34.78. The B point that I would use on this would be the low put in on April 24th. Then the high is on May 1st, when it gets up to 34.09. It completed a 1 to 1.618 A to B equals CD. Now it is doing the second A to B equals CD down. I believe, though, these guys raise their guidance as well. So we'll see what this wants to do. But right now it is trading into, and it is rejecting price. But you've got volume coming into this swing point. It's not done with its work. If it does come through that swing point on June the 1st, what it's doing, it is setting up at least a move probably to the 27.74 area. That would make a lot of sense. What will give it a little bit of support happens to be that downdraft from November 9th. So the high there, 28.48, that would be your 1-to-1 A to B equals CD, 27.74 as your 1-to-1.272. So if it does actually get inside the candle of November 9th, what it will want to do is go all the way down to $26.13. That would be your 1 to 1.618 A to B equals CD. That's the pattern that have fulfilled the last A, B, C, D down, and that might be the next one. You got the Dow down 20 points, S&P's off 3, Composite off 4, small caps down 2.5. 877-927-6648. It is Wonderful Wednesday. Thanks for being here, folks. We'll be right back.
Take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find find an invaluable tool to help me analyze the potential of the market each day. It gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Dow off 22 points right now. S&P's off 3. Composite off 3. Around Europe right now, you've got the DAX up 4 points. FTSE up 15. Gold. Let's go take a look at gold down $20 right now. I do have the 5-minute charts on the ETFs up here, and you can see AB equals CD downs being created in everything so far: the SPYs, the IWM, and the diamonds, with the exception of the Qs. The Qs not making an A and B equals CD down pattern just yet. But let's go over to gold. You've got gold trading out right now out at 1602. And what is interesting about gold here, if you're taking a look at the screen here on TigerTV, you get two moving average lines out there. Now, this is the daily chart. This is the 50 and the 200-day moving average on the daily chart. And trust me, folks, when you do the crossover, when you do the death cross on any daily chart there, it is absolutely telling you to be cautious about what you're trading. So it says cautious from the standpoint of getting into a long-term bearish mode here. That's exactly where gold is at right now. Now, that 200-day exponential moving average, that is the red line that is coming across here. You can see it's been tested basically 3 times now. Each time, gold has gotten up into that range. The first time is June the 6th, when gold gets up to 1642, gets up there, says, nah, don't like this high level. I think I'll go down to the basement floor. Tries to get down into the basement floor. The basement floor that I'm talking about happens to be the swing point low going back to September 26th, which is in that 1535 area. Next time gold gets up there happens to be 4 or 5 trading sessions ago on June 15th, gets up to a high of 1635. You can see runs right in to that 200-day moving average. Yesterday gets really close. I mean, we're talking smidgens here when gold gets up to a high of 1643.30, and again today does not like that area. So that 200-day exponential moving average on the gold contract, folks, is absolutely acting as a strong resistance area, and that is ever since you had the 50-day cross through it. So, trade accordingly. And if you're going to trade intraday, if you're going to be trading either the gold triple or double, you've got a pretty nice trading range actually intraday, because you're better off trading the contract, but you've got a pretty nice trading range here now. That trading range, what gold is going to try to do is get into the most recent swing point, which is June 8th. The high there is 1596.30. Not down there just yet, hasn't touched it just yet, but it wants to get down there. That had 254,000 contracts so far today. You have done only 65,000 contracts. If we take a look at, let's go take a look at silver, see what silver is doing as long as we're in the metals side of life right now. You've got silver trading off 30 cents, trading out at 28.07. What silver wants to do is, now silver crossed through and got into the bearish phase longer term back here in the November 2011 time frame. What silver is doing this morning, running up into the most recent swing point that I'm looking at, happens to be December 29, 2011. The high there is 27.84. It's gotten down to, it's gotten close, but no cigar just yet. It's gotten down to 27.93. Looks like it wants to at least try to get in that area. That area had 32,000 contracts. So far today, you've done 24,000 contracts. Should have enough volume to at least get in there. If it stays inside that swing point, sets up at least a run down to 26.73. What you really want to see from a what you really want to see with regard to playing a intraday a trade or a shorter term trade is a test of 26.14. Time just flies, folks. Make sure you use it wisely. Stay tuned. Tom and I will be up next. Then we go up to Basil Chapman, then off to Larry Pesavento, back here from 3 to 4, where I'll join you while David White is out today, and I'll be the warm-up band for the Tom O'Brien Show from 4 to 6. Have a great day, folks.